Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.
Ozcast.
Okay, so, we love to really dig into what's happening in the crypto world, and you sent this fascinating article from FX Leaders, dated March 24th, 2025, about Ethereum. And it's not just about the price. It's about all these big financial players making moves.
Right.
And I think our mission today is to cut through the noise and really figure out, what does this mean for, our listeners?
Absolutely.
What should we be paying attention to?
Yeah, I think what's really interesting is, you have this kind of, it's like two sides of the same coin here, where you have this institutional interest in Ethereum's underlying technology, specifically when it comes to tokenizing real world assets.
Yeah.
And then on the other side of that, you have the market itself and, the technical signals that are kind of giving us a little bit of a hint as to, where price action could go in the short and long term.
Okay, so I'm seeing two main themes here.
Yeah.
The FX Leaders piece is really highlighting this growing appetite from major financial firms for using Ethereum in this whole realm of real world asset tokenization. And then there's this whole other part about technical analysis that's, maybe hinting at a pretty big price swing.
Yeah.
So maybe let's start with this institutional adoption angle.
Oh.
What is it about Ethereum right now that's so attractive to these big players?
Well, the article kind of kicks it off with Fidelity and their recent filing to register their on-chain treasury fund on Ethereum.
Okay.
Now, this isn't about putting physical U.S. Treasury bills directly onto the blockchain.
Gotcha.
It's a tokenized version of their existing Fidelity Treasury Digital Fund,
Okay.
which already has about $80 million in U.S. Treasury bills.
Okay.
So begs the question, why even bother tokenizing this in the first place?
Right. What's the point?
So according to Fidelity, the main idea here is to increase openness and accuracy in tracking shared transactions. So by using the Ethereum blockchain to reconcile these transactions daily with their official records,
Okay.
they believe they can offer investors, this new level of transparency and verification.
I see. So it's kind of like having a public, constantly updating, record of everything.
Exactly. It's like a publicly visible, constantly updated mirror of their internal records.
Okay.
And this move by Fidelity is really significant because, they're this traditional financial giant.
Yeah.
And it really signals a fundamental shift in how these established players are viewing blockchain technology.
Right.
And really interacting with it. And so this opens up, tons of possibilities for the future.
Yeah.
Imagine a world where, assets that are traditionally less liquid are now more easily divisible and tradable because they've been tokenized. Yeah, that's really the potential that we're starting to see here.
So it's like this more transparent and efficient way of keeping track of things.
Yeah.
And it sounds like Fidelity's not the only one who's doing this.
Yeah.
The article mentioned some other big names as well that are exploring this space.
Absolutely.
Yeah.
Yeah, Fidelity's move is definitely part of a larger trend. We're seeing other major players like BlackRock and Franklin Templeton actively investigating and implementing blockchain solutions for traditional financial assets.
So it's not just like a one-off thing. This
Yeah.
is like a real trend.
It seems to be a pretty clear indication that there's a growing recognition of the efficiencies and the potential benefits
Right.
that blockchain can bring to established financial system.
And, when it comes to this whole real-world asset tokenization thing, it seems like Ethereum is really the dominant platform.
Yeah.
I was looking at the data from rway.xyz that the article cited, and it's kind of crazy how far ahead Ethereum is.
The numbers are really compelling.
Yeah.
Ethereum currently hosts over $3.3 billion worth of tokenized real-world assets. And, to put that into perspective, its closest competitor, Stellar, has around $465.6 million.
So it's not even close.
Not even close.
Yeah.
It really highlights, Ethereum's current position as the go-to platform in this emerging area.
So there's this quote in the article that I found really interesting from BlackRock's head of crypto, Robbie Michnick, about why they see Ethereum as like, the main blockchain for their tokenization efforts.
Yeah.
What was his take on it?
Well, he said, and this is a direct quote, there was no question that the blockchain we would start our tokenization on would be Ethereum. That's the natural default answer.
Wow.
And he went on to explain that, it's really Ethereum's decentralized nature, its established credibility, and its robust security features that made it the clear choice for them.
Yeah. It makes you wonder, though, like, are there any downsides to Ethereum? Like, are there any limitations that these institutions might need to consider as this space evolves?
That's a great question.
Yeah.
Even with all these advantages, there are ongoing developments aimed at improving things like scalability and gas fees.
Right.
So that's definitely something to keep an eye on.
Yeah.
But, even with those considerations, BlackRock is clearly putting their money where their mouth is, because the article also points out that they've significantly increased their Ethereum holdings within their BUIDL fund.
Really?
Yeah, their BUIDL fund has grown to almost $1.145 billion
Wow.
as of March 24th. And just the week before, it was over $990 million.
So that's a huge jump.
It's a considerable jump in a very short time frame.
Yep.
It indicates a growing appetite for ETH, even as they strategically diversify across other blockchain networks as well.
So they're not just talking the talk, they're walking the walk.
Exactly.
It makes you wonder if this institutional conviction is part of what's, maybe driving this potential price rebound that the technical analysis is suggesting.
It's definitely a possibility.
Okay, so let's talk about the price action. The article notes that Ethereum has had a pretty big pullback recently.
Yeah, it has. After hitting a high of $4,101 in December of 2024, Ethereum has experienced a significant correction and is currently trading around that $2,000 level.
Right.
So that's roughly a 50% decrease in just the past 3 months, which can obviously be concerning for investors who maybe bought in at the top.
But the article points out that this $2,000 mark could actually be a really important level historically.
Yeah.
Why is that?
Well, $2,000 is identified as this crucial long-term support level.
Okay.
Historically, when Ethereum has bounced off of this level,
Yeah.
We've seen significant upward movements. The article even mentions previous instances where we saw gains of over 2,000% and 360%
Oh, wow.
after bouncing from similar support levels.
So this is a level where, historically things have kind of turned around.
Yeah, there's a historical precedent suggesting that there is potential for upward momentum from this zone. It's worth noting, though, that past performance isn't always indicative of future results.
Right.
Especially in a market like crypto.
Of course. Yeah.
Which is still, relatively nascent and volatile.
So based on the technical analysis in the article, like, how much could we potentially see ETH go up if the support holds?
Well, the technical indicators suggest that there's a potential for a 65% rally towards $3,400 by June, if Ethereum does find strong support at these levels.
Wow.
Now, this target aligns with what they describe as the lowest threshold of declining channel resistance in their analysis.
And remind me what a declining channel is.
Sure. Think of it like two downward sloping trend lines that kind of contain the price action.
Gotcha.
And that resistance line at the top of this channel often acts as a ceiling for price movements. So in this scenario, we could potentially see a substantial recovery in the coming months.
But, of course, we have to be realistic and we have to look at, both sides of the coin here. So what happens if this $2,000 support doesn't hold? What are the risks?
Well, if that happens, the analysis suggests we could see ETH drop to around $1,560.
Okay.
Which is near the 200-week exponential moving average.
And the 200-week exponential moving average, tell me about that a little bit.
Yeah, so that's a long-term trend indicator that a lot of traders are watching.
Okay.
It essentially smooths out the price fluctuations over a long period of time to give you a sense of the overall direction.
I see.
And so a move down to that level, would represent a pretty significant decline.
Yeah.
So it's definitely an important downside risk to be aware of.
Okay, so we've talked about the long term a little bit, but the article also goes into some of the shorter term price action.
Yeah.
And it identifies some key levels that traders are watching. What are some of those?
So according to Rec Capital, who was cited in the article, the macro range above $2,200 is considered critical for establishing a real bullish trend.
So until we break above that, it's still kind of iffy.
Yeah, as long as Ethereum stays below that level, the downward pressure is still a concern.
Okay.
Now, FX leaders also pointed out some specific resistance levels that we should be watching in the short term at $2,020 and $2,040.
Okay.
So if those levels are broken, with conviction, then we could see further upward movement towards potential targets of $2,120, $2,150, or even $2,250.
Okay.
And then, of course, on the downside, we have those key support levels to watch at $1,980, $1,950, and $9,880.
Okay, so another thing that I found really interesting in the article was the discussion about what's happening in the Ethereum futures market.
Yeah.
What's going on there? What did the article have to say about that?
Well, the article pointed out that Ethereum futures open interest jumped to a new all-time high on March 21st.
Okay.
Now, open interest just refers to the total number of outstanding futures contracts. So basically, when you see a jump in open interest like this, it suggests that more large traders are putting money on the line.
Yeah.
They're making new bets.
So they're opening up new positions.
Exactly. And when this happens alongside, a price level that many people think is a potential bottom, it can be interpreted as, these sophisticated traders believing that the price is more likely to go up.
Interesting.
Rather than down.
And the article mentions a potential target of above $2,400.
Right. That's kind of the thinking among some of these large traders.
I see.
And so increased open interest like this, often precedes significant price movements because eventually these large positions need to be closed out.
Right.
So it's not just about the historical price patterns in these key levels.
Yeah.
The activity in the futures market is adding another layer of intrigue to this whole potential price recovery.
Okay, so we've got institutions showing long-term conviction through real-world asset tokenization.
Right.
They're increasing their holdings. We've got technical indicators suggesting a potential price rebound. And, we're seeing activity in the futures market that kind of supports that.
Yeah.
But there's another piece of the puzzle that I want to talk about, which is the behavior of these large Ethereum holders, these whales, as they're often called.
Yeah.
What does the data tell us about what they've been doing?
So this is where the on-chain data from firms like Nansen and Glassnode really gives us some valuable insights into market sentiment.
Okay.
Nansen's data reveals a really interesting trend.
Yeah.
Addresses holding between 10,000 and 100,000 ETH have increased their holdings by a substantial 28.73% since March 12th.
Okay.
But here's the really interesting part. During that same period, addresses holding between 1,000 and 10,000 ETH actually decreased their holdings by 5.65%.
So the whales are getting more ETH and the smaller holders are selling.
That's exactly what the data suggests.
Interesting. So what could be the reason for that?
Well, the interpretation from Nansen's research analysts is that these very large whales are accumulating ETH.
Okay.
They see this price level as a good opportunity to buy.
Right.
Meanwhile, the smaller but still substantial holders might be taking profits or just reducing their exposure because of all the recent volatility.
Makes sense.
And Glassnode's data actually supports this trend as well.
Okay.
They show an increase in the number of addresses holding at least $100,000 worth of Ether, rising from just over 70,000 on March 10th to over 75,000 by March 22nd.
So more big holders in general.
Exactly. This overall increase in the number of large holders could be a sign of a growing conviction among these investors.
Interesting.
Regarding Ethereum's future prospects. So these really big players are doubling down on their bet.
So we've got the institutions, we've got the technical analysis, we've got the whales.
Yeah.
What about the longer-term outlook for Ethereum's price? What's the article say about that?
Well, despite some potential short-term uncertainty, like, concerns about this global trade war that's going on, the long-term view for ETH seems to be pretty optimistic.
Okay.
At least according to the investment firm VanEck. They're projecting a potential cycle top of $6,000 for Ether during 2025.
So that would be a huge increase from where we are now.
It would be a significant increase. Yeah.
So it seems like there are a lot of factors converging around Ethereum right now.
Yeah.
We've got these major financial institutions that are embracing this technology for tokenizing real-world assets.
Yeah.
And that's a really strong signal, that they believe in its potential.
Right.
Then we have the technical analysis, which is suggesting that there's a possibility of, some pretty big price appreciation if the current support level holds.
Right.
And we're seeing these whales accumulating ETH,
Exactly.
which supports this whole narrative of, growing confidence among some of these key market participants. Of course, we always have to remember that with any investment in this space, there are inherent risks.
Of course.
And the potential for, short-term price swings.
Yep.
But what's really fascinating to me is how all of these different pieces of the puzzle seem to be fitting together.
Yeah.
It's like the institutional adoption could very well be a fundamental driver for this kind of long-term price appreciation that the technical analysis and the projections are suggesting.
It's definitely a compelling argument.
Yeah.
This convergence of traditional finance with the innovative capabilities of blockchain technology.
Right.
Particularly how Ethereum is increasingly being used for these real-world assets. It's a significant development that we should all be paying attention to.
So as you're listening to all of this, I want you to consider this.
Okay.
How might this increasing integration of traditional finance and blockchain technology, particularly through Ethereum, how might this reshape the whole landscape of investment and asset ownership for, everyday people? What new opportunities or challenges might this unlock?
Yeah.
That, maybe we haven't even thought about yet.
It's a really interesting question.
Yeah, it's definitely a space to watch.
Absolutely.
Thanks for taking this deep dive with us today.
My pleasure.
And we'll see you next time.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast. Ozcast. Simply head to ozcastnetwork.com for details.